Hey, everybody, welcome back to the Thinking Crypto channel, your home for crypto news and interviews. Guys, I have some big news to share with you. We have an FDIC chairman saying that they have a roadmap to allow US banks to hold cryptocurrencies and not just hold them, provide collateral, loans, and all kinds of financial products around crypto. This is groundbreaking. I want to share the details with you. It's coming directly from the chairman talking about this in an interview that was covered by Reuters. So it has been verified. So I want to talk about the implications and the amount of money that's going to open up for the crypto asset class. In addition, Tesla has filed with the SEC implicating that or showing that they can potentially launch Bitcoin payments again. We know Tesla was accepting Bitcoin earlier this year till Elon Musk hit the brakes on that. And it looks like they're about to open it back up again. We also have some huge Ripple ODL adoption news. In the Middle East, XRP is going to be used for payments. I want to share the details there. And then we have some massive Chainlink news. They have partnered with Amazon Web Services, guys. I'm bullish on Chainlink, so I want to break it all down for you. Before we get to it, please go ahead and hit the thumbs up button, leave a comment below, and hit the subscribe button if you're new here. It helps support the channel and it doesn't cost you anything. Guys, this video is brought to you by OKCoin Crypto Exchange, where you can buy, sell, and trade your favorite cryptocurrencies, and you don't have to pay a high fees. OKCoin charges low fees. In addition, you can stake your crypto and keep 100% of the rewards. OKCoin does not charge any fees for staking, and it is the only exchange that you can buy Miami coin and stake it and earn 430% APY yield. So that is awesome. I'm currently staking and earning the Stacks token as a reward. So be sure to sign up, link in the description. All right, let's look at the market here as far as prices. Not much happening. Bitcoin almost seems boring at $60,000. But as I've been telling you guys, right, I've been drawing it on the weekly chart for months and months. I'm expecting a pullback and we see the red candles forming here. I do think we can go down to 58 or 55K, bounce off as a support level, and then continue to work our way upwards into new all-time highs as we head into November. So that's how I'm anticipating things will play out. Maybe we don't go that low, to 58K, but we'll see what happens. I would gladly be wrong, but as I've been sharing with you guys, it's playing out as I've been saying. That's because market cycles are playing out here. So we have to keep that in mind. It's not what we want, it's how is the market trending? And that's what we have to pay attention to. And of course, altcoins are going to follow Bitcoin's move. So we want Bitcoin to do well. We want Bitcoin to hit new all-time highs. So altcoins will also do the same. So that's what's happening right now. It's a patience game, just our holding pattern. And look, not financial investment advice, but this pullback and building support levels could be another entry point where you can grab more crypto because we know there's more upside coming. So once again, not financial investment advice. Am I buying some of the dips here? Yes. Am I buying Bitcoin? No, I'm buying altcoins, which still have upside. I mentioned I've been buying Algorand, taking a larger position and so forth. So just sharing what I'm doing. Once again, do your own research. All right, look at this news. US banking regulators exploring roadmap for banks to engage with cryptocurrency. This is the FDIC chairman. US banking regulators examining cryptocurrency custody services, collateral use, and balance sheet holdings. This is from the FDIC chairman. Guys, this was confirmed by Reuters here. This is massively bullish, my friends. So a top US bank regulator said US officials are looking to provide a clearer path for banks and their clients that are looking to hold cryptocurrencies in order to keep control over the fast developing asset. AKA, the banks are about to FOMO because they're being left behind. People are moving their money out of traditional savings accounts and they're putting it into lending and staking and holding the assets. They're taking the money out of the fiat accounts because of inflation. I hope you understand the translation there, right? So Jelena McWilliams, who chairs the Federal Deposit Insurance Corporation, FDIC. You go to your local bank, you see FDIC insured. told Reuters in an interview on Monday that a team of US bank regulators is trying to provide a roadmap for banks to engage with crypto assets. That could include clearer rules over holding cryptocurrency in custody to facilitate client trading, using them as collateral for loans, or even holding them on their balance sheets like more traditional assets. Wow, guys, here's a quote. I think that we need to allow banks in this space while appropriately managing and mitigating risks, she said in an interview on the sidelines of the FinTech conference. Here's a quote again. If we don't bring this activity inside the banks, it is going to develop outside the banks. The federal regulators won't be able to regulate it. McWilliams' comments provide the fullest picture of what regulators are exploring as part of a cryptocurrency sprint team announced in May. The goal of the team was to ensure cryptocurrency policy coordination among the three main US bank regulators, FDIC, Federal Reserve, and the Office of the Comptroller of the Currency. Now, a couple of things here. The OCC, the Office of the Comptroller of the Currency, when it was under Brian Brooks, he gave the banks the green light to custody crypto and how to handle stable coins. Federal Reserve, Chairman Powell, what did he recently say? No ban on Bitcoin and crypto. We don't have any plans to do that. And now the FDIC saying, hey, we need to help these banks so that they can hold the crypto assets. And once again, I give the interpretation, the money is leaving the banks. So they better get on board or they will be disrupted, right? So all the banks in the United States and globally will start holding crypto assets. We're seeing that. The pipelines are being laid down for that. The regulation is slowly rolling out. And the FDIC is that insurance, right? So, this is just massive. This is the government, guys. This is not some Wall Street bank. This is the government saying, hey, we're ready to lay the plans out and the roadmap for this. So as you can imagine, if they greenlight all the banks in the United States, give them the FDIC assurance, the Federal Reserve's behind it, the OCC, lots of money coming in. We're talking trillions. And that is not hyperbole. Think about all the assets that exist in the open market. And the other aspect of that, guys, what did we see the Fed started doing last year when the pandemic happened? They started pumping the markets, right? Because a lot of the banks, a lot of wealthy individuals hold stocks and other equities and so forth. They pumped it. What do you think is going to happen when those same institutions and wealthy individuals start holding crypto? Fed's going to pump it because we know they can't stop printing money. And that is part of why people are moving to hard assets, hard money like Bitcoin and other cryptocurrencies, guys. I hope you see what is happening here. This is massively bullish news. And I'm not trying to be like a perma bull and be super hyped, but we're talking about the FDIC here, the Federal Reserve and the OCC, the tribunal which controls the money of the United States and look, part of the world as well, guys. This is massive. They're on board, and I think we're just going to see more banks coming on board. And look, maybe this is the news we hear towards the end of the year that's just going to send Bitcoin, I don't know, to $150,000 to $200,000. Who knows, right? But they could honestly, a lot of these banks can honestly hold Bitcoin on their balance sheet with the green light they're about to get. And remember what I've been sharing with you guys. I talked about some politicians, all politics aside. I said, we talked about Newt Gingrich and Senator Rand Paul, what their statements were around Bitcoin. And I said, the timing of this is interesting. Then we got this news. They were talking about Bitcoin as an inflation hedge. Newt Gingrich said that Bitcoin could be held by central banks. I think there's a narrative coming here, and we're seeing some of it playing out here, guys. Bullish times ahead. All right, let's talk Tesla and the SEC and Bitcoin. So SEC filing by Tesla, essentially hinting that they may start accepting Bitcoin again. As mentioned at the beginning of the video, they were accepting Bitcoin, but then Elon Musk pumped the brakes on that, saying he needs the Bitcoin mining to get to about 50% renewable energy, 50% or higher. I think with the Bitcoin Mining Council, a lot of the miners leaving China, coming to the United States, using more clean energy, I think that's being met. And I think this is going to be one of the narrative items that's going to be strategically placed this respective market cycle to drive the price higher. So once again, we will see a pump from Elon, which is not ideal, but this is nevertheless bullish, because if they had hinted before there was a problem, now that problem's been fixed and they're accepting Bitcoin again, other car companies are going to do the same. Other corporates and institutions are going to do the same as well. And I'm certainly expecting to hear from Google and Amazon and so forth, who may start accepting crypto. All right, Ripple ODL. ODL, on-demand liquidity, uses XRP. Here, Ripple announced, we're thrilled to share that we're partnering with Pyypl, if that's the right way to say it. It says Pyypl payment card for everyone. It's a non-bank financial services provider focusing on the Middle East, Africa, and Central Asia. So they're going to be leveraging ODL. So that means they're leveraging XRP. Let me give you some details. With the $78 billion in remittances in 2020 from Saudi Arabia and the United Arab Emirates combined, the Middle East and North Africa region is home to two of the top 3 remittance corridors in the world. The region is also undergoing a fast-moving shift to digital and boasts one of the world's most progressive financial regulatory environments. Today, Ripple announced its continuing contribution to this hotbed of fintech innovation with the first ever in-market on-demand liquidity, ODL, deployment in the Middle East through a partnership with international blockchain-based financial services company Pyypl. Once again, I apologize if I'm butchering that name. The two will bring instant low-cost remittances to the area, starting with the United Arab Emirates. And here they confirm using ODL and leveraging XRP, Pyypl will provide instant low-cost remittance options for people sending money into and out of the region. Note, XRP will not be held within the UAE and transactions will not involve the currency AED as part of the payment flow. This is part of Pyypl's larger mission to enable digital payments for the 1 billion financially underserved smartphone users in the Middle East and Africa at large. Huge untapped market. They're bringing a disruptive, more efficient solution to the corridor and to the market, guys. And XRP is being leveraged. So there's still going to be haters out there saying, oh, XRP is not being leveraged. Ripple continues to expand globally, and there's more folks using XRP globally, despite the SEC lawsuit, which I believe the SEC will lose and Ripple will win, and they will get the clarity they need. So more confirmation, XRP being leveraged, and I'm bullish on XRP. It's the number one in my portfolio, has not changed. Bitcoin, my number 2, Ethereum, my number 3, and obviously I have other altcoins as well. Now, here, Stuart Alderati, who is general counsel at Ripple, he weighed in on the Terra Luna situation. So those of you who don't know, the SEC is going after Terra Luna, and this, the CEO, he's been going out there on the offensive. They're actually counter-suing the SEC, which I like. I wish Coinbase, Terra Luna, Ripple, and the other companies that the SEC is going after would come together and go after the SEC. I think they need to punch back together here, but great to see they're taking the offensive. And Stuart Alderati weighed in on this, talking about how the SEC treated Terra Luna. He said, sound familiar, ? 1, SEC asked for and gets voluntary corporation. 2, SEC next, without explanation, threatens enforcement. 3, SEC doesn't get unconditional surrender, so it ramps up intimidation and aggression. In other countries, that's called tyranny. We must be better. He's absolutely right. The SEC is operating as a mob, and we see they're going around shaking down crypto companies to try to get settlement money. It's pathetic. Charles Gasparino tweeted the following. He's been doing a lot of investigative journalism and reporting on the Ripple XRP lawsuit. He says, memo to XRP Army, Eleanor Tourette is putting the finishing touches on her XRP Ripple regulatory roadmap. She will be exceedingly fair and will give all parties a chance to weigh in and influence our final product. Stay tuned. Continue to see more reporting and coverage of this, and it will help put accountability on Gensler and the SEC and expose the conflicts of interest we know they've done with Ethereum and giving Ethereum a free pass, which is not right. So I love that this is happening. It puts pressure on Gensler, bad optics for Gensler and the SEC. Finally, you guys know I hold Chainlink. I am bullish on Chainlink, guys. They continue. I follow Chainlink on Twitter. Almost every day they're announcing partnerships, guys. It's amazing, but check this one out. Through a cooperation between Amazon Web Service partners and Chainlink, data providers can now easily deploy a Chainlink Oracle node on Amazon Web Services cloud with new Amazon Web Service Chainlink Quick Start, a one-click workflow for selling real-world data across multiple blockchain networks. Guys, Amazon's partnering with Chainlink. This is a big vote of confidence. And I think Chainlink is going to be one of the winners coming out of this market. As I've stated many times, there's going to be winners and losers, just like there was in the dot-com boom, right? Google's, Amazon's, and eBay's were winners, but pets.com was a loser, and many other websites which didn't have a lasting potential, or they weren't solving any problem. Chainlink solves a problem, guys. And I think right here, partnering with Amazon is a big a vote of confidence. And I think, honestly, not financial or investment advice, I think Chainlink could go to $100 plus at the peak of this bull market cycle, possibly near $200, which I will be very happy with. Anything over $100 is going to be awesome, guys. So just sharing my thoughts on it, what I hold in my portfolio. I've shown this to you guys. Those of you who are channel members, you have direct access to this and obviously the updates that happen. But like I stated, I continue to grab up as much Algorand as possible because Anthony Scaramucci put $100 million into the ecosystem. So did Michael Arrington. So something is cooking up with Algorand. I recently interviewed Sean Ford, the COO of Algorand, and look, central banks are building their CBDCs on Algorand, and they're working on scaling Algorand to 10,000 transactions per second. You do what you want with that information. I highly recommend you do your own research. Please do your own research, but just sharing the facts of what's happening and why I'm taking a larger position. Plus, it's a proof of stake blockchain. If you buy it and you're holding it, you're earning reward. So just heads up on that. All right, guys, what do you think about this FDIC chairwoman news? I think they're laying the groundwork for banks in the United States plus the Federal Reserve to hold crypto assets. I think that is highly, highly possible, the Federal Reserve. But the banks themselves, we already see that's happening with BNY Mellon and many others, but they still need the full clarity. And I think the on-ramps, the infrastructure is being built here. So we're still in the first inning, and there's a lot more money to come into this market, guys. I'm bullish on it. Let me know what you think. Leave your thoughts and comments below. Hit the thumbs up button, share this video, and I'll talk to you all later.